Hello guys, we are Hanif, Sarah, Hakim and Iza from DIA6F. So we are going to sharing about tax administration and GST. So the first one is tax administration of a company.
Hello guys, I'm Hanif. Okay, so for the how the company be a resident in Malaysia. Okay, under paragraph 8 submission 1 submission B of the Income Tax Act 1967, a company or a body of persons not being a Hindu joint family carry on a trade or business is resident in Malaysia for the basis year for a year of assessment. So for the not being a Hindu joint family, that's mean only for the Malay people and Chinese. Okay, so we move to the next slide, which what tax implication might be received by the company when it's a resident and non-resident in Malaysia for the year relevant assessment. Okay, so we go to the resident. Resident is required to maintain under section 108 account for purpose of tax deduction of franking dividend under the existing imputation system. Okay, for the next point is the resident are eligible to claim tax incentive as prescribed under the Act and the Promotion of Investment Act 1986. Okay, for lastly, for the resident, income would be taxable if it is deemed derived from Malaysia. Okay, for the non-resident, it is opposite by the resident. So non-resident is not required to maintain such account. Okay, non-resident also are not entitled for any tax incentive. Okay, for the lastly, non-resident will only be taxed on income acquiring in or derived from Malaysia, provided if there is a business present. Okay, so we next slide, which is what IRB. IRB is Inland Revenue Board does in practice to identify the company be a resident in Malaysia. Okay, so for the firstly is IRB can identify by the location of the company. Okay, the second is a place where the annual grand meeting are held. Okay, the thirdly is the company letterhead. So IRB can see the letterhead of the company to identify the company whether the resident in Malaysia or not. Okay, so for the lastly is minutes of board of director meetings and the decision taken that are relevant in the determining the management and control of company. Okay, so that's all from me. Thank you.
So hello guys, my name is Hakim. So I will continue about types of tax return form used by the company for the submission of income tax. Basically, the companies use only three form of income tax return, which is ITR 5, 6 and 7. Okay, so we go to the first form, which is ITR 5. The ITR 5 form is used only by the following bodies to file all the company's income tax return, which is firms, limited liability partnerships, body of individuals, association of persons, cooperative societies, artificial judicial persons, and also local authorities. So for the ITR 6 form is used only by all the companies except those companies or organizations that claim tax exemption as per section 11. Okay, organization that can claim tax exemption as per section 11 are organization in which the income received is accumulated from the property used for the purpose of religion or charity. Okay, so this particular income tax return form is only available to be filed online. So guys, the last income tax return is income tax return 7. So those individuals or companies that are required to submit their return under the following section are required to file the income tax return through ITR 7. So under of all the section is under section 139 submission 4A, 4B, 4C and 4D, and also section 10 submission 23A and 23B, and also any association involved with scientific research, any new agency, any fund, medical institution or educational institution. So that's all for the types of income tax return form used by company.
Hello guys, welcome back to my channel. Okay. So we proceed to the procedure that must be complied by each company for income tax under self-assessment system. Okay, for the first procedure is furnish estimate of tax. An estimate of tax payable must be furnished in a prescribed from not later than 30 days before the beginning of the basis period for the year of assessment. Okay, for the new company, the estimate of tax payable must be furnished within the 3 months from the date of commencement of operation estimate of tax. Okay, so we move to the second procedure is make installment payment. Okay, the estimate tax payable must be paid in equal monthly installment commencing from the second month in the basis period. Okay, for the new company, monthly installment must commence from the 6th month in the basis period. This monthly installment must be paid on or before 10 days of each month, with effect from year of assessment 2002. Inland Revenue Board will not issue notice of installment scheme for companies that have complied with the provision in provision in furnishing tax estimate. Therefore, companies can carry on to make installment payment according to the estimate submitted. Okay, so that's all from me. Thank you.
So after the procedure make installment payment, we will go to the next procedure, which is final payment. Okay, companies must settle the difference between actual tax liability and total installment payment on or before the last date of the 6th month from the date following the close of its accounting period. So okay, that's for final payment. And the next procedure, which is file return form C to IRB. Okay, for the year of assessment 2001, a new written form C will be designed to facilitate companies to compute their tax. Okay, the last procedure is issue and submission. For this procedure, IRB will issue written form C on a quarterly basis based on company's accounting period. Okay, so their written form C must be completed and submitted to Inland Revenue Board within 6 months after the close of its accounting period. So that's all for the procedure. Thank you. So for the types of penalties might be imposed if the company doesn't comply self-assessment system. So based on section 120 subsection 1 subsection F of the Income Tax Act 1967, it stated any company which without reasonable excuse fails to submit the estimate of tax payable for a year of assessment shall be guilty of an offence and upon conviction be liable to a fine ranging from Rm 200 to Rm 2000 or face imprisonment for a term not exceeding 6 months or both of the penalties. So in addition, for any late payment, there is penalty, which is monthly payment should be remitted to the LHDN by the due dates. Okay, that is by the 10th day of the following month. Failure to remit the installment on a timely basis will result in an automatic penalty of 10% being imposed on the unpaid amount. So that's all for me. Thank you.
Goods and Services Tax, GST. Hello, I am Aida Baisara Azman. I will explain about chronology of changes from Sales and Service Tax, SST and GST, and back to a new form of SST in Malaysia. Okay, firstly, in 1970, SST 1.0 was first introduced by Tun Dr. Mahathir. Next, in 1972, sales tax was implemented, but service tax is not yet implemented until 1975 it is implemented. Next is on 16 December 2016, first reading at the Dewan Rakyat, the lower house of the Malaysian Parliament. In the same time, in the middle time, in the third quarter of 2011, GST scheduled to be implemented by the government during the third quarter of 2011. The implementation of the GST was delayed. Next is in 1 April 2015, government reading of the 2015 budget, Malaysian Prime Minister Najib Razak announced a GST tax of 6% start. While in May 2018, the new Malaysian government led by Mahathir Mohamad decided to reintroduce the SST after completely scrapping GST. Next, in 1 June 2018, the GST standard rate has been revised to 0% beginning the 1st of June 2018, pending the total removal of the Goods and Services Tax Act in Parliament. Lastly, in 1 September 2018, reintroduction of SST 2.0, which will come into effect.
Okay, next we move to the differences between SST and GST and the computation. Okay, what is the differences between Goods and Services Tax and Sales and Services Tax? Okay, firstly, tax levied on any taxable goods and services provided by any taxable person. That means GST only implement on the goods and services that is provided by any taxable person, while the Sales and Service Tax, which is SST, only charge on any taxable services that provided by any taxable person. Okay, next, GST rate 6% is for standard rate and certain supplies are treated as zero rate. Also, exempt or are subjected to relief. That means they does not count the tax and does not reveal the tax. Okay, next for SST is the rate is 6% for service tax and the range for sales tax is 5% to 25%. Okay, next is goods and services tax is multi-stage. Okay, what is multi-stage? Multi-stage is mean that the tax will not implement on the final price. They will implement from the above, from the manufacturer's restaurant price and come to below. While the sales and service tax is a single stage tax. That means the tax direct to the final price. Okay, for GST is broad tax based. That means the GST have the white cover of tax. That means all of the goods and services, and there's a lot of goods and services, so the tax is white that can implement to many things, while sales and service tax only can implement on the sales that we need to pay and the services. That means the SST is narrow tax base, while goods and services tax is broad. Okay, next let me move to the Okay, as I said before, what is narrow tax base and wide tax base? Okay, as you can see, for the GST, okay, the product price is RM2 ringgit. The GST will implement 6%, which is 12 cents, and the total will be 2 ringgit and 12 cents. That means, as you can see, the sales and service tax also is the sales tax is 10%. Okay, the how to calculate is the same, but when it's come to the restaurant and what we have to pay, okay, for the GST, we have the multi-stage that we have to count the cost to restaurant, 2 ringgit 12 cents, input tax credit, we have minus 12 cents, subtotal 1, 2 ringgit, okay. And then they will put their profit, which is 2 ringgit, and subtotal 2 will be 4 ringgit. Okay, so after they get the 4 ringgit, after plus the profit, after that they will implement the 6% on the 4 ringgit, which is 24 cents. So the total that we have to pay is 4 ringgit and 24 cents. While for the SST, they will take the total 2 ringgit 20 cents that is cost to the restaurant, they plus the profit 2 ringgit, and the subtotal will be 4 ringgit and 20 cents. So the GST is 6%, which is 25 cents. So the total that you need to pay is 4 ringgit and 25 cents.
So that's all from us. Thank you.